As of March 2023, there was approximately 493 billion rands invested in living annuities with linked services providers in South Africa. This is a 20 billion rand increase from the previous quarter, December 2022, where the figure was approximately 470 billion rand. In today's video, we'll be diving into the world of living annuities. If you're nearing retirement or want to make informed decisions about your retirement funds, this video is for you. We'll be covering common questions about living annuities to help you navigate this important financial choice. But before we begin, let's remember that when it comes to retirement planning, seeking advice from an independent retirement expert is crucial. A living annuity is a financial investment that is linked to unit trusts, cash investments, or share portfolios designed to pay you a regular income throughout your retirement. Anyone who is retiring from a pension, provident, preservation, or retirement annuity fund can choose to purchase a living annuity. In simple terms, if you're invested in a registered retirement fund, you have the option of buying a living annuity. However, it's important to note that living annuities are exclusively reserved for retirement benefits regulated by the Pension Funds Act, which means you can't purchase a living annuity using the funds from a discretionary investment. Now that you know what and who can buy a living annuity, let's talk about the process of setting one up. From an administrative perspective, setting up a living annuity is relatively easy. However, there are key factors you need to consider beforehand. Firstly, you'll need to decide whether to commute up to 1/3 of your retirement fund in cash or invest the full amount, keeping in mind the tax implications of a cash withdrawal. You should consider inflation and longevity risks, since a living annuity doesn't guarantee an income for life like a life annuity does. Additionally, you'll need to decide on the most appropriate investment composition, asset allocation, and investment platform based on your specific needs, risk tolerance, and desired investment returns. Now, let's address a common question about living annuity. Are there minimum contribution limits? Most investment platforms require a minimum contribution of between 50,000 and 100,000 Rand for an initial lump sum. Can you make additional contributions to your living annuity? Yes, you can make additional contributions as long as the benefit comes from another approved retirement fund. Is there an age limit for purchasing a living annuity? No, there are no age limits. However, you generally won't be able to retire from your retirement fund before the age of 55. This means you have the option of purchasing a living annuity anytime from the age of 55 onwards. Can you invest offshore through a living annuity? Absolutely. If you're invested in a living annuity, the policy falls under the Long-Term Insurance Act, so your investment is not subject to Regulation 28 of the Pension Funds Act, which limits offshore exposure. You can choose to invest 100% of your living annuity assets offshore, depending on your goals and objectives. However, remember that your investment will need to be in a rand-denominated offshore feeder fund, since direct investment in foreign domiciled funds is not allowed. If you are not familiar with Regulation 28, check out our video on it. The link will be in the description below. Let's talk about how much you can draw from your living annuity. The legislation permits you to draw a pension income of between 2.5% and 17.5% per year of the value of the residual capital. You can choose to draw down on an income monthly, quarterly, biannually, or on an annual basis, depending on your personal circumstances. Furthermore, you have the option to adjust your drawdown rates every year on the anniversary date of your living annuity. It's important to note that the drawdown rate you choose will have a significant impact on the sustainability of your income throughout your retirement years. A higher drawdown rate may provide more income initially, but could deplete your capital faster, while a lower drawdown rate may offer more longevity, but result in lower immediate income. It's crucial to strike a balance that meets your income needs while preserving the longevity of your living annuity. Let's discuss the taxation of living annuities. The income you receive from your living annuity is subject to income tax. However, the taxation differs based on your age. If you're under 65, the income drawn from your living annuity is taxed according to the normal income tax tables. If you're 65 or older, you qualify for the so-called senior tax certificate, which provides for a higher tax threshold and lower tax rates. Remember to consult with a tax professional or financial planner to ensure you understand the tax implications of your specific situation. What happens to your living annuity in the event of your death? One of the advantages of a living annuity is that you can nominate beneficiaries to receive the remaining funds upon your death. When setting up your living annuity, it's essential to name your beneficiaries and specify the allocation of the remaining funds. This allows your beneficiaries to inherit the remaining capital and continue drawing an income from the annuity, or choose to take the capital as a lump sum, subject, of course, to tax implications. As you progress through your retirement years, it's crucial to review and potentially adjust your living annuity. Market conditions, your changing needs, and investment performance can all impact your retirement income. Periodically, reassess your investment strategy, asset allocation, and drawdown rates to ensure they align with your objectives and circumstances. Seeking advice from a qualified financial planner can help you make informed decisions and optimize the performance of your living annuity. In conclusion, living annuities offer flexibility and control over your retirement funds, allowing you to choose how much income to draw and how to invest your capital. However, with this flexibility comes responsibility. It's essential to carefully consider your needs, risk tolerance, and long-term financial goals when setting up and managing a living annuity. Remember to seek guidance from experts in retirement planning and consult with financial planners or retirement specialists who can provide personalized advice based on your unique circumstances. We hope this video has shed some light on living annuities and empowered you to make informed decisions for your retirement. If you found this information valuable, don't forget to like this video and subscribe to our channel for more insightful financial education content. Thank you for watching. We'll see you in the next video.